All right, in this video today, we spend most of our time focusing on what to buy. All right, that's kind of our biggest focus. What am I going to buy? What am I going to invest in the stock market and in the futures market? Today, I want to talk about what we should not be buying. All right, sometimes we want to know what we shouldn't have in our portfolios or what we should not be buying. So I want to use TradeMiner to go through and do the bearish side of things to tell us what markets generally fall during the month of December rather than rise. We've done the rise. We know what markets have a tendency to rise, and we've used TradeMiner to help us identify rising markets in certain specific months, and we've done December. Now we're going to see which markets not to be in, because I think that's important to know too. Which markets do we have in our portfolio that don't generally rise in December? And so we want to liquidate those positions, take profits, or do something to mitigate those possible losses in those different markets. So the way we do that is we come in here and we're going to go through step one of the TradeMiner Pro search, and it says search for trends in the month of December. Because it's December, we want to know what trends have won at least 80% of the time, but this time instead of saying bullish, we're going to say bearish. So that means which markets 80% of the time in the month of December fall, go down. All right, so that's how we're going to know in the stock market which ones not to buy. Now, if you want to short them or you want to buy puts, that would be a strategy you could do too. But I think this time I want to focus on, hey, do we have any of these stocks in our portfolio? If we do, we need to do some sort of possible mitigation or just get rid of them for now and then rebuy them back at another time, because statistically speaking, they generally don't do very well in the month of December. So we're going to come through and we're going to list trades that last at least 10 trading days, but no more than 30 trading days, and find at least 15 years of history. So we're going to remove all the duplicates, and we're going to go ahead and hit search now. And as this goes through the database, I'm going to tell you that I've done this with the futures version, and I've already run the scan. And in the interest of time, we'll flip over and look at the scan that we've done for the month of December in the futures market as well here in just a second, as soon as this is done. So here we go. This is the stocks that don't do so well in the month of December. So we can kind of go down through this list. You can see there's 41 of them that match this criteria. And what we want to do is we want to make sure we don't have any of these in our portfolio. Now, it's important to also look at the starting date. So we'll sort this by the date. I had it sorted by score, but the score is not really what we're mostly in, isn't as important in this sense, because what we're really looking for is we just want to see which stocks might be in our portfolio that do poorly in the month of January, and maybe we can weed some of those out if we need to clean our portfolio. So we can just come down through this very quickly. You can see between December 1st and December 14th, so the first 2 weeks of December, Amazon doesn't do very good. 82% of the time over the last 17 years, it's lost 2%. So in the first couple of weeks of December, Amazon, not so good. We have Kimco Realty. Again, over 83% of the times over the last 18 years, this thing's lost money. So we don't want that one. Old Dominion Freight, if you got that one, not so good. 80% of the time over the last 15 years, this thing's lost 2% in the month of December. So Transdigm, we've got Raymond Financial, American Tower, Pentair PLC, Hasbro, some of it, that's a popular stock, December 1st to December 21st. So that first whole part of the month of December, 80% of the time over the last 25 years, that thing's lost on average 5%. Hasbro, that's a toy company. So you'd think in Christmas time, but maybe, Christmas time, they generally don't do well. Ross Stores, that's a clothing store, right, for women. December 5th to December 19th. I don't know, does Ross have men's clothes? Maybe. It's a clothes store. I don't know much about Ross. I know they're around here in this area. But December 5th to December 19th, 80% of the time over the last 35 years, they've lost 2% in the month of December. Not so good for Ross. So you don't want to have that in your portfolio in December. Bath and Body Works. Isn't that I don't know, is that company that has all the smelly soaps and stuff? I think so. Bath and Body Works. Maybe it's I'm not sure. December 6th to January 11th, 81% of the time over the last 21 years, they've lost 4%. Don't have Bath and Body Works in your portfolio in the month of December. All right. How about Southwest Airlines? Oh, everybody's traveling for Christmas. We'll go buy some Southwest Airlines. No, between December 6th and December 21st, 80% of the time over the last 30 years, that thing's lost money on average. Okay, 3%. CSX, transportation, that's a big train company, right? December 6th to December 19th, 80% of the time over the last 15 years, it's lost 2%. Don't have that thing in your portfolio. Here's A.O. Smith. Here's Best Buy. Oh, we'd think Best Buy. Hey, everybody's buying Christmas presents. They're going out to Best Buy, picking up those electronics for Christmas. December 6th to December 25th, 80% of the time over the last 35 years, that thing's lost 7%. Get that dog out of your portfolio in December. We don't want that baby. All right, there's Moody's, there's Garmin, there's Roper, there's Gilead. There's Gilead Sciences. That's a popular one. December 8th to December 29th, 83% of the time over the last 23 years. That thing's lost 2% in the month of December. Get that baby out of your portfolio. All right. International flavors. We got CarMax, December 11th to December 27th, 81% of the time over the last 16 years. That thing's lost 3%. Get that dog out of your portfolio. All right. FactSet, Paycheck, Travelers. That's it's got a huge, well, that might not be the one that I'm thinking about, but between December 21st and January 4th, towards the end of the December, 82% of the time over the last 17 years, lost 2%. So towards the end of December, get that dog out of your portfolio. Atmos, Consolidated Edison, Pepsi, December 22nd to January 29th. That's a whole month period of time. 81% of the time, that dog's lost money. Get that Pepsi out of your portfolio between December and going into the end of January. End of December into January. Aeon, we got Colgate Palmolive. How many of you had that in your portfolio? December 27th to February 6th. 81% of the time. Over the last 16 years, that thing's been on average lost money 1%. Get that bugger out of your portfolio by December 27th. Duke Energy, December 27th to January 9th. 82% of the time over the last 17 years, that dog's lost money. Okay, these dogs don't hunt, as old Scott Berry would say. So O'Reilly Automotive, December 27th to January 24th, 81% of the time, 16 years. It's lost 3%. Get that baby out of your portfolio. Procter & Gamble. There's December 27th to January 9th, 81% of the time. Over the last 16 years, that thing's lost 1%. Get that dog out of your portfolio. Or at least put a put option on it. Or, just be mindful of the fact that you're not going to make money on it, probably, most likely. I mean, past performance is not necessarily indicative of future results, but it's the best information we have, right? So Coca-Cola, December 28th to January 30th, 81% of the time over the last 26 years. That dog doesn't hunt. Genuine Parts, December 28th to January 24th, 81% of the time over the last 27 years. That dog didn't hunt. Okay, Dollar Tree, December 29th, February 7th, 81% of the time. Over the last 16 years, that baby lost 2%. Kellogg's, December 29th to February 7th, 81% of the time. Over the last 21 years, that dog did not hunt between the end of December and the first part of February. 3%. That's not a long period of time. That's what? Oh, well, that's 41 calendar days, so it's longer than I give it credit for. Oh, into February. I was thinking January 7th. February 7th, that's 41 days. That baby, don't be eating Kellogg's in the month of January, February. Energy Corporation, Arthur J. Colliger, 81% of the time over the last 15 years, 4%, that baby's lost money. So be very careful. These are green, meaning that they would have made money if you'd have gone short on them. That's why they're all the green in there. All right, so those are the ones that we should be watching for the month of December not to have in our portfolio. We want to liquidate those babies and focus on our winners. And so we oftentimes focus on, hey, which charts should we be looking at? These are the ones we should be liquidating, getting out of our portfolio. Let's go over and look at the futures market. We're going to jump into the futures market. I've already done the scan, so in the interest of time, save us a little bit of time. I scanned it already, and I've already picked out some of the more popular ones. I've left out some of the currencies and stuff, but picked up some of the traditional commodities, and I put those into our neural network so we could see it. I ran the scan on the neural network. You can see that we got a couple of them in here that are high. That's sugar. We got a couple of mediums in here. We got a couple of very lows, coffee, gas. Another high is corn. So this is to the short side. Now, some of these have already started. See, this has started on December 1st to December 14th. Now, remember, again, this is bearish. So this is to the short side. So don't be taking these puppies long. These are bad ones for long positions. And you can see over here, we're already, in this case, on a short position on a high bearish on platinum, up $916. This one here, this is wheat to the short side. We're up $633. This is sugar. Sugar's up $23. And that's, again, to the short side, not to the long side. This lean hogs is up $69. So they're following through, just like we anticipated, losing money if you're long, making money if you're short, through the first part. So here's another one. Here's cocoa. December 7th to January 3rd, 85% of the time over the last 13 years, this baby's lost 75%. ROM, return on margin. So you can see in here we got one more. There's soybean oil, December 8th to December 21st, 82% of the time over the last 11 years. That thing's lost 52%. And here's coffee. Haven't we got coffee in here again? Coffee, no, coffee's in here. December 11th to December 26th, 88% of the time over the last 8 years. A 16 calendar day period, that thing has averaged 87% loss. It's gone down 87%, 88% of the time. So that's a $2,000 on quantity one. So here we go, natural gas. December 22nd to January 4th, 82% of the time over the last 11 years, 14 calendar days, that thing's been on average lost 55%. Corn, December 26th to January 12th, 82% of the time over the last 11 years, 18 calendar days, average profits lost 8%. So you just don't want to be going long on these markets. None of these, you don't want to be taking any long positions in them. And if you want to take the shorts, take the shorts. So here's live cattle, December 28th to January 10th, 82% of the time over the last 11 years. It's lost 55%. So soybean meal, December 29th to January 24th, 80% of the time over the last 10 years. It's lost 5%. And then feeder cattle, didn't we have feeder cattle in here? No, the live cattle. Feeder cattle, December 29th to February 8th, 80% of the time over the last 10 years. 42 calendar days, 85% loss on your portfolio, or 85% gain if you're short. So that's just a quick rundown of some of the stocks and commodities that we should not be trading to the long side during the month of December. And of course, a lot of these, they're starting towards the end of December, so they're going off into the January and February, so we have to keep that in mind. It's not just through the month of December, it's when those start dates were, which I put in here December, so they start in December, but they may end somewhere in January, February. So be mindful of that. Look at these different portfolios and watch out, because those are some stocks you don't want to be long and some commodities that you might want to be taking short positions in. All right, if you have any questions, please let me know. We'll catch you next time.